Very briefly, I'll start with the IEA outlook because it actually was a significant change in their stance, especially when it comes to peak oil demand. We did get a little bit of a heads up that there was going to be a major change in this report. And what they've done essentially is that they're reintroducing this scenario that they call current policies scenario. And in this scenario now, they're arguing that oil demand, as things stand with the current policies, as the name suggests, oil demand actually keeps growing from the current 100 million barrels per day all the way to 113 million barrels per day by 2050. So 13% from the current levels. And they are saying that this will be mainly driven by slower EV adoption and weaker policy enforcement. And when it comes to pricing, they are arguing that oil prices will actually remain relatively high at around $90 a barrel by 2035, as this kind of excess demand mops up whatever extra supply we get. Also importantly, I think, to talk about is that other core scenario that they have been talking about, which they call STEPS, which is the stated policy scenario. And I think very interestingly on this one is that they are still, they're seeing oil demand peak much earlier than 2050, currently seeing it at around 2030, which is actually much later than where they saw it in last year's report. So they are moving that back in that scenario, in the stated policy scenario too. And by 2050, in this scenario, they're seeing oil demand at 97 million barrels per day, so lower than where we are, but much higher than where they saw it last year, which was around 93 million barrels per day.